Let's talk about multiple states for taxation and figuring what's really owed. And this is a situation where you basically have worked in multiple states. So you want to figure out what's owed when you live and work in more than one state. Okay. So here's an overview I want you to pay attention to. The thing here is that basically, where do you file state taxes if you live and work in different states? And so the thing is that if you actually earn income in one state while living in another, you should really expect to file a tax return for the states where you are living, in other words, your resident state. And you may also be required to file a state tax return where your employer is located or any state where you have a source of income. And it's really important to know that if you live or work in one of the 9 U.S. states that do not charge income tax, you probably will not be required to file a return for that state. So states that do not charge income tax include Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. Okay. And so do you have to file taxes in 2 states? It really depends. It depends on your situation. So some states have an agreement that says workers who live out of states only have to file in the states where they live. Okay. Where they live, not where they work. And these states have what's actually known as a reciprocal tax agreement or reciprocity. Sometimes you'll hear the term reciprocity. Sometimes it's called reciprocal tax agreement. And if you work and if your work state and home state do not have a reciprocity, you should expect to file 2 state tax returns, one as a resident for the states where you are living and one as a non-resident for the states where you work. So what is actually a non-resident state return? You might ask. Well, it really depends, but overall, the general meaning here is that being a non-resident means that you have not lived in a state where you earn income for any part of the year. So you will file this form if you work in the states, but you don't live there. So for instance, you actually live in Jersey, but you are actually working in New York. So basically you will file your Jersey resident return, but you'll file a New York non-resident return. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now, when we talk about multiple states and how you're trying to really figure out what's owed when you live and work in more than one state, the thing is that how can you avoid paying double taxes if you are required to file in more than one state? Well, the good thing is that federal law prevents actually 2 states from being able to tax the same income. So this is kind of important. If a state has already taxed your income, another state cannot actually tax the same income. Okay. If the states do not have reciprocity, then you will typically get a credit for the taxes withheld by your work state. And it's one of those things where if you have any question, just let us know, because every situation is different. So we just want to make sure that we give you the right information. So let us know in the comment section, and our team will get back to you with the specifics of your situation. So let us know the states where you live and the states where you actually work, and we'll just we'll let you know, first of all, if there is reciprocity, and if not, what you can do to actually avoid being double taxed. Okay. Now, where should you file state taxes if you moved during the year? Well, if you permanently move to another state, you will be required to file 2 state returns, one for each state you lived in during the tax year, assuming both states charge income tax. You may be able to claim part year residence, which will allow you to divide your income between the two states instead of paying taxes twice. Note that each state has its own rules for determining residency and how you should indicate your status on the tax forms. So check with the State Department of Revenue the Department of Revenue in each state to learn what's required for your situation. Now, how do you actually file state taxes if you work remotely for an out-of-state employer? Well, again, going back to what I said, it's very specific depending on the state itself. Different states have different tax rules, and your income tax liability may actually change based on the state you are in, but you should expect to file taxes for both states. So again, one return as a resident for the state where you live, and a separate return as a non-resident for the states where you work. It's one of those things. I mean, a lot of viewers have that situation during COVID, for instance, a couple of years ago, 2 or 3 years ago during COVID, where you have a lot of folks were telecommuting. And so that situation arose. And so it's one of those things, again, you always have to file 2 state returns, or 3 or 4 or 5 for that matter, where one one state you are the resident and the other state you are a non-resident. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about multiple states, figuring out what's owed when you live and work in more than one state. Another question is, can you actually still file jointly if your spouse worked in a different state than you did? Yes. Because for your federal income taxes, you can file jointly and report all the income you earn. For state taxes, you will report both of your incomes on your resident state return if your state charges income tax, and you will file a separate return for the states where you or your spouse works and report only the income earned in that state. By the way, I want to quickly remind you once again that there are 9 states that do not charge income tax, and it's important to really keep that in mind, because otherwise you might be in a state where instead of not paying taxes, you are paying taxes. So those states are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, state of Washington, and Wyoming. Okay. And another thing is, where should you file? What should you actually file state taxes if you move during the year? And it's one of those things where you got to really ask yourself. I mean, I think I already answered that question. Yeah. So if you moved, it's all about the residency the residency test. One thing I want to say here is that, what about the military? So what state do you file if you are in the military and stationed outside of your resident state? Okay, military, choose actually a legal domicile or state of legal residence to your SLR. This is where you will pay state income taxes. So if you are stationed somewhere other than your SLR, you are exempt from paying taxes to that state unless you are earning civilian income in addition to your military pay. So as long as you actually stick with the military pay, you are good to go, you are covered. So military spouses may be allowed to claim the same states of legal residence as their partner, but they actually must meet certain requirements. So it's one of those things. Please let us know in the comments if you really have a question around that, because again, every state is different. So we want to make sure that we can't just give you a generic answer here. We just need to be clear about your specific situation before providing guidance. Now let's talk about when do you need to file taxes in multiple states, okay? Now there are 5 times, based on our research, where you may need to file taxes in multiple states. So the first scenario is if you live in one state and working in another state. So that's pretty simple. So let's say you live in New Jersey, and you work in New York or Connecticut, for instance. So this is totally fine. In that case, you have to file 2 state taxes. Okay. Now, if you live in one state but work in a neighboring one, you may have to file state tax return with both states. However, if your home state, let's say Jersey, has a reciprocity agreement with Connecticut or New York, then you will typically need to pay state income taxes only in Jersey. Okay. Now, the second scenario is if you and your spouse work in different states. So let's say you and your spouse file taxes jointly but work in separate states. In most cases, you will need to file a state tax return only in the state where you both live, even if an employer is in another state. And let me quickly sort of put a caveat here, though. In some instances, however, you will be required to file multiple state income tax returns. This is the case if an employer withheld taxes for a state where either of you work, but not the one where you both live. So for most states, you would file a non-resident state tax return in your state of work. You can actually review your paycheck stub or IRS Form W-2 to determine which states withheld state taxes. But it really depends also on where you work and reside, because each state has its own rules regarding non-resident state tax returns. Again, if you are unsure, please let us know in the comment section. Our team will certainly get back to you, or you can just consider hiring a CPA or an enrolled agent or other tax preparer to explore your state tax filing requirements. Okay. And you may also be able to get some information from your state's tax department, and which is actually the better option, to actually call the authorities directly and ask questions, so they will be able to give you the proper guidance as to how to navigate your situation. But again, our team is really ready to answer any questions that you may have. Just let us know, drop us a comment, and we'll certainly get back to you. That's not a problem. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about multiple states figuring what's owed when you live and work in more than one state. Another scenario where you have to actually file multiple state taxes is if you lived in 2 states during a year. So you may need to file multiple state tax returns if you lived in different states during the same year, maybe if you worked remotely. And so you may be considered a part-year resident of each state, and that could affect how much you pay in taxes, okay? A part-year resident also is someone who moved and resided in 2 states during different parts of the year. For example, let's say you lived in Louisiana for more than 5 years, but decided to relocate to Georgia in June of last year, with plans to make it your new residence. In this case, you may need to file part-year resident tax returns with both states. And if you also conduct business in other states, if you do business in another states besides the one where you live, you may need to file an additional state tax return. For example, Florida requires out-of-state business owners to file a state tax return if they have employees or maintain a business office in Florida. And additionally, that's what we've seen in our research, Louisiana, for instance, requires you to file tax returns if you receive income within the states, even though your business operates elsewhere. Okay. And so it's best to really check with your home states and any states where you do business to determine your filing requirements. So it's all about, as I think I said earlier, it's all about the nexus. If you're able to establish nexus, and basically, and also in some cases, you have to apportion your income to actually allocate the specific share of income that you derive from one state in order to calculate the specific income tax. And also, there's another scenario where you have to file multiple state income taxes if you own rental property in another state. So if you own out-of-state rental property, its location may determine whether you need to pay taxes to the other state. And some states, such as Georgia, require non-residents to pay taxes for rental income they receive within the each state. And similar to operating a business in multiple states, it's best to contact the states where you have rental properties to determine whether you are required to file state tax returns. So again, every situation is different, and it's always a better, either you can let us know in the comment section, we'll certainly get back to you, or you can contact the authorities directly and ask them what kind of guidance you should actually follow in your specific situation. Now let's talk about a few things to consider when filing multiple state tax return, okay? First of all, you need to understand the different rules regarding the states where you lived or worked throughout the year. And you can find the tax offices and information for states you resided or worked in via the Federation of Tax Administrators. Next, what you want to do is you want to find out when state taxes are due, particularly if you are required to file state returns in multiple states. States may have tax deadlines that are different from the IRS national tax deadline in mid-April. And so the AICPA, for instance, offers a complete list of up-to-date state tax deadlines. So if you have to file actually taxes in multiple states, ideally, it's really in your best interest to file multiple state tax returns using online software, okay? Online tax software. In other words, you want to automate everything. And most programs will transfer your federal income tax filing information into your required state tax returns. And if your tax situation is a bit more complicated, it's a great idea to seek the assistance of a tax professional. Again, we're speaking here about a certified public accountant, a CPA, or an EA, an enrolled agent, or a tax attorney. And throughout the year, you want to do your best to pay enough state taxes by checking your tax withholdings. And you want to use an online state tax withholding calculator or speak with a CPA if you need assistance. And if you actually determine you're not paying enough state taxes, you want to contact your HR department at work to increase your state tax withholding. If you're self-employed, you'll need to pay estimated state income taxes, okay? And if you actually prepare your own taxes, be ready to pay more than someone who has only one state tax return to file. It's one of those things where you have to really, it's just part of the game. Some online tax filing software programs like TurboTax and H&R Block, they charge a fee for filing state returns, typically about $50 to $75, okay? Meanwhile, other providers such as Cash App will not allow you to file multiple state tax returns. So it's one of those things where you have to really see exactly what kind of situation applies to you, what kind of scenario rather applies to your specific situation, okay? But the bottom line here is that it is totally possible if you actually prepare, it's possible to actually have a smooth, a seamless, multiple state tax filing situation. Now, what are some of the things you need to really pay attention to before you actually, if you have to file taxes in multiple states? There are a few things you need to pay attention to. First of all, you got to think about states with reciprocity. So if the state in which you work has a reciprocity agreement with the state in which you live, the procedure is usually simple, okay? You will not be taxed on where the income is earned. You will be just taxed where you live. So this is pretty straightforward. You can ask your employer to have income taxes withheld for the states where you live. And you generally file a state income tax return like you would if you worked in your home state. And so based on our research, as of right now, as of the date of this show, 15 states and the District of Columbia have reciprocity agreements. So some states have an agreement with just another state, while others have agreements with as many as 6 or 7 states. So the reciprocity agreements are generally with nearby states where a lot of commuters live. For example, DC, Maryland, and Virginia all have reciprocity. And so the DC represents a unique case because the District of Columbia is precluded from taxing non-residents regardless of where they earn income. And so Virginia and Maryland have responded to this by adopting commuter agreements, which exempts each other's residents from tax, but also ensure that they are able to tax their residents when they work in DC. So this is kind of cool. And Kentucky, as a matter of fact, has the tax reciprocity agreements with the most states. You have Illinois, Indiana, Michigan, Ohio, Virginia, West Virginia, and Wisconsin. A few states have reciprocity agreements only with one another. For example, Iowa offers reciprocity with Illinois, Montana with North Dakota, and New Jersey with Pennsylvania. It's really important to understand that reciprocity agreements benefit taxpayers by dramatically reducing tax filing complexity, really. And so they are particularly beneficial, what we have seen in our research, that they're beneficial to hybrid workers who may work from home several days a week, and in an office across state lines on others. So reciprocity agreements eliminate the need to track which days were worked for tax purposes, and they let each state focus on taxing their own residents. And there are also some states without reciprocity, of course. So basically, if the states where you work doesn't have reciprocity with the states where you live, you may need to take extra steps when you file your income tax return. So it is what it is. Don't actually fight it. And so a few states have more complicated rules. So the rules are more complicated in New York, for instance. So New York and a handful of other states have so-called convenience rules. So they source income to that state if your office is located there, even if you actually work elsewhere. So for many remote workers who don't have an office but whose employer is located in New York or another convenience rule state, this can result in double taxation. So under the convenience rule, an employee is treated as if they work in their employer's state if their work is performed elsewhere for the convenience of the employer. So this can actually include remote work as well. So Connecticut, Delaware, Nebraska, New York, and Pennsylvania currently have convenience rules. It's one of those things where, hey, listen, if you want to avoid complications, let your employer's HR department know which states you live in and ask about the rules. If you move to a different state, be sure to let your employer know so he can adjust your state tax withholding. And also, if the states don't have reciprocity, find out about your obligations to the states where you work and keep records of where you work and when. Thank you so much for your attention. I really appreciate it. Let's quickly do a recap here. So in today's conversation, I spoke to you about multiple states figuring out what's owed when you live and work in more than one state. So I give you the overview and also give you a few steps to really navigate multiple states when it comes to taxation. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.